Good morning, folks. It's Wednesday, March 15th. I think it's Wednesday, but in any case, it's March 15th. Yes, it is Wednesday. Wednesday, March 15th. Quick on the schedule. Today, XXII, 4:30 p.m. XXII CEO. Stay tuned for that. I got some hard-hitting, awesome questions for Jim Mish, CEO of XXII. Now, today I had planned, and if we have time, I'm going to go through a list of stocks that have shown relative strength over the last couple of weeks through the turmoil we've had in the past week or so. But we got a bigger headline. It's Credit Suisse. We got to talk about that. We also had PPI. But look at this. Credit Suisse. I noted Credit Suisse yesterday morning and also in the chat room about a filing they put out. Yes, the filing came out early. It was the first post of the day in our chat room about some difficulty they're having, an SEC filing. And yesterday, I didn't pull the trigger, but I was like, man, I'm thinking of shorting Credit Suisse. The reason I didn't was, the biggest reason I didn't was it was a $2.50 stocks. And I was looking at the options. There weren't a lot of options. There's not a lot of room for a crash, right? Like how much money are you going to make from 250 to 180? But turns out you can make a lot, because one of the things are, which I didn't notice till later in the day, look at these option strikes. You have not every 10 cents, but you had 190 and 150. But that was expiring in 2 days. When I went out a little bit further, I didn't see that 190. So I just didn't like the levels of the contracts that are available. And that was the main reason I didn't short it. Now, I did get into FAZ with Vince near the end of the day, but that I didn't even hold overnight. Took a quick loss on it. The only thing that I'm protected with, that I'm holding, is I made that rotation Monday morning into gold and TLT in my IRA, which I've held completely through. And I also bought call options in my trading account, which I've held completely through. But here's the situation with Credit Suisse. First of all, let me just say that PPI numbers came out, and it was a big miss on the good side, meaning it came in much later than expected, okay? February actual month over month, negative 0.1 versus a 0.3 estimate. So beat by 0.4%, okay? So that happened. But no one cares and no one's talking about it. Certainly does help for the Fed to say, okay, let's pause. And that's part of why you're seeing TLT surge here at 3%. But I think the bigger headline, what everyone's talking about, and the bigger worry is Credit Suisse. In fact, when we talk about the Fed and their mandates, right, their mandates are inflation, employment. There's a third unwritten mandate, and that's financial stability, bank stability. And that mandate, that unwritten mandate, is probably more important than the other two combined. So everyone front and center worried about Credit Suisse. Now, the interesting thing about Credit Suisse, I see so many parallels here to how SVB went out of business last week. So let's look at this here. You see SVB here on Wednesday. They had a filing here, March 8th. You see the stock was down a little bit, or maybe, yeah, the filing was Wednesday. So the stock was modestly down. That filing was, hey, we have a $2 billion loss. We got to raise some money. Stock was down. But the stock didn't dive until the next day when Peter Thiel said, get the heck out of Credit Suisse. So now we're seeing something, get the hell out of SVB Bank. Now we're seeing something similar where Credit Suisse yesterday, I was sounding the alarm with the filing, the SEC filing that said they have, I forgot the exact words in it, but we put it that they have, let's see if we can find it here from yesterday. I mean, oh gosh, it's March 15th. We got to go, material weakness. They said, Credit Suisse finds material weaknesses in financial reporting. That was a headline. And the stock, curiously, didn't go down much on it yesterday. But today, we have Saudi Arabia saying we can't put more money in Credit Suisse. You have Nouriel Roubini coming out and saying this could be the Lehman moment, something I've been saying for months. It's why Credit Suisse has been on our watch list. And as early as I think it was early this morning, last night, I said Credit Suisse. I probably said it last week too. After SVB went down, the SVB was the Bear Stearns moment, but Credit Suisse can be the Lehman moment. And that's the storyline this morning. That's the storyline. Is there a run on the bank developing right now? And look, I think I know Credit Suisse had its own issues and it's been down for a long time. But to me, the thing that's precipitating the bank runs, overall big picture, is, I like big picture. I don't like to get into the details because I think I can predict markets much better by looking at the big picture holistically. And what I see, big picture, these bank issues are because of the bond collapse, right? Meaning even JP Morgan, if everyone withdrew their money from JP Morgan wouldn't have enough money to give everybody. Okay. So every bank now, some are worse off than others. So I understand that. And that's why they're being hit first, right? So Credit Suisse has some issues, but the underlying issue is the bond collapse is giving banks some issues with their assets. And then the other issue is a run on the bank is much easier to happen in a world of social media apps, right? Where you can quickly withdraw your money. And these banks, these clientele are rich clientele. So it's a smaller group of people that have to be convinced, a smaller group of people where everything has to spread. So that's why I see so many parallels. Anyone who says, oh, SVP was a minor bank, doesn't matter. No, I mean, this was VC. This was startups. These were important people. This is Peter Thiel. Okay, so it's the same type. It's different people, I know, but it's the same caliber type of people with their money at Credit Suisse. And now you see material weakness yesterday. Today you see Saudi Arabia and and Nouriel Roubini sounding the alarm. And you have online banking, which makes it very easy for people to pull their money out. And thus, you see Credit Suisse crashing down 28%, taking the entire banking like JP Morgan, including the regional banks. You have FAZ exploding. You have QQQ and SPY dying despite the weak PPI number. Okay, and as I said Monday morning, it's the same playbook. The safest way to play this is TLT and gold because, yeah, there might be a Fed pivot, but there might be a Fed pivot because of impending economic doom. And that's not an environment you want to be in QQQ and SPY in. A Fed pivot directly is very good for bonds. Also, there's a flight to safety to bonds. And of course, a pivot is good for gold as well. If inflation stays higher. I'm actually thinking on Monday, I was like, I think gold's better than TLT, and it's proven to be. But now I'm thinking like TLT might be better because I'm thinking inflation might collapse too. If there's going to be an economic collapse, inflation is going to collapse. And that even if rates go down, even if there's a Fed pivot, gold shouldn't necessarily do that well longer term, intermediate term, if there's going to be an economic collapse and deflation. So I think TLT is really the play here. You see the market echoing that here, up 3% this morning. So listen, I'm probably not going to make many moves today, except maybe look to add more TLT and gold. Add to my positions I added on Monday. And that's the story with the banks staying out of Dodge. I'm not going to play these First Republics and Walls and all that kind of stuff. PACW, not interested. None of this stuff is safe right now, in my opinion, even with the Fed backstop. Okay. Now let's go see if there's any specific stocks. And if we have time, we'll go over a couple things. So let's see if there's any new news in the last 30 minutes here that we made a rumble again with news on nonstop news over there. Jack, Timus. Okay, ready? So, Blink Charging unveils completely redesigned mobile EV charger for fleets and EV. Well, nothing's going to go up today, guys, based on news. It's got to be killer news. So we're not playing any individual stocks, but I'll keep you updated, okay? We had SRAD come out. This is one Chris Tarver put on our radar. This is a online sports betting stock that helps support like DraftKings and things like that. They reported earnings. Revenue beat by about 6%. You see the stock up 6%. They guided for revenue 2023 about 4.7% higher. And you can see the stock up about 6%. I'm not going to play this in today's market. And also, I can't see the EPS very clearly. They reported adjusted EBITDA, and I can't compare that very easily to the EPS estimates out on Yahoo Finance. So not going to do a re-rating play on that. Generac had some news out this morning on a product update. Very cool, the stuff they're doing, but not something that's going to move the market today. It's not like a huge deal. It's not revenue generating. All right. Now, down here from Microsoft and below are stocks. I went through like a couple hundred stocks last night and focus on the ones that we've covered on our morning show the last couple months. And I discovered there's a group of stocks that are really outperforming the rest of the stocks, right? In terms of technical strength after great catalysts, right? All of these stocks we're talking about, they had great catalysts. That's why they were featured on our morning show. Earnings beat, ChatGPT and Microsoft, earnings beat and CrowdStrike, all of these did, right? YEXT with the AI and all that. LAZR with the Mercedes deal, all these stocks have good catalysts, but some of them have held up technically while others have not. So this is kind of separating. The price action is kind of doing our homework for us in terms of which catalysts are more important to the bottom line, which catalyst might be an inflection point, and which stocks might be safer to invest in longer term. I'm going to quickly go through this list Now today, people are worried about economic doom, but still the exercise still pertains, and it's still important. It's a matter of picking your spots of when you want to step into some of these. A lot of these I may be thinking about putting in my IRA even today, right? I may start adding some of these names together with some hedge of TLT and gold. But let's start with Microsoft. So Microsoft, you know why it's been on our radar with ChatGPT. And I noticed, look, this is above the 20 DMA because we've had a lot of volatility last couple of weeks, and a lot of stocks are not above key moving averages, and they're still below. Despite the pop we've had in the market, there's weak stocks and there's strong stocks, and Microsoft is one of the strong stocks above the 20 DMA. Now, yesterday, the OpenAI released ChatGPT4, which is amazing. It looks amazing. Go look at the blog on ChatGPT4. And then later in the day, Microsoft confirmed that ChatGPT4 is in Bing. And in fact, it's already been in Bing. So that was a catalyst, I think, that had the stock shooting up there to 261. Now, if market's more stable, I'd slam dunk. I'd be like all over Microsoft today. And you have support here at 255. But I'm not sure with markets the way it is. I'm thinking about this in terms of timeline. I would advise think about this more like IRA, more like multiple year time frame. If you're going to get into any of these stocks we talk about, given the potential of Credit Suisse going under within a couple of days, possible that happens, any stock, no matter how great it is going to be significantly down in that kind of environment if that happens. So think about these as long-term investments. Meta, technicals have been Meta and Netflix have seemed to have found its bottom, even though the market may have not bottomed. And Meta keeps on going up with the more people they fire. Very, very interesting. If you look at the technicals here, above the 20 DMA, RSI not really overbought. Looks like it's challenging that recent high here of February 8th or so. And it looks like it could go to that 200 DMA, 230. I mean, what could participate this? We'd need some sort of resolution over the next week with what's going on with the banking crisis and the Fed to pivot or pause, and then maybe you can get a rally, but we got to avoid economic collapse in the banking system for that to happen. So there is a possibility that the stock like Meta and Microsoft, even in the short term, but again, given what's going on, I think you got to think more longer term on these. Okay, CrowdStrike, another one. This had great earnings, beat estimates above the 20 DMA, so it's the stock is in a healthy place. Maybe it wants to head over the 200 DMA at some point. Same with NVIDIA. Great earnings beat. Look at this one. Is that close? It's that's not a 52-week high yet, but man, it's getting close. Look at that chart. Unbelievable. So another strong stock. I've never invested in it. I don't know much about it. Just pointing it out that we had covered this stock before. I think this was a stock that Vegas had covered for us one of the mornings. It was an earnings beat. PANW, a little more interesting to me than NVIDIA, just valuation-wise. But this one also cybersecurity name. It beat, it gapped, and it's consolidated its gains. And I was about to say, why is this on their list last night after I looked at all the charts? Because it was staying above the 20 DMA. Now, pre-market action doesn't care. You know how many times I've seen this? And then when the market opens, it'll actually open at 183. We'll see if PANW can hold 20 DMA. If it doesn't, then we may have to take PANW off the list. Man, that had a good chart last night. Okay, Dick's Sporting Goods. Again, this one, 52-week high. Wow. Been crushing earnings multiple quarters in a row, crushing earnings and raising guidance. So those are the big cap companies, okay? Microsoft through Dick's. And now we go into some smaller caps, which have been showing a lot of relative strength. And we have YEXT, which was given to us by Chris Tuttle. This is that alternative AI play, and has been right. It's been better than AI. While the whole market was playing AI on ChatGPT, Chris Tuttle said, I think I have another ChatGPT play that's better, YEXT, and he was right. Man, we played this for a while, but I didn't keep in it. I never actually bought any for my IRA on this one. Maybe I should have. But YEXT has been incredible at new highs here after they had a good earnings report and riding that AI wave, that ChatGPT wave. ARLO, recently given to us by Julian. Apparently, they had a great report. I didn't even listen to the CC yet. He says, listen to that CC. Advise us to listen. It's above the 200 DMA after a great earnings report. That one also. LAZR, this is interesting because we know they had that great Mercedes deal, and it's right here at the 20 DMA support. Now, it could go to 200 DMA support, still be bullish. It could go to 50 DMA support, still be bullish. I do hold this one in my IRA, and I'm happy to hold it because I think that news with Mercedes is an inflection point news. Then we have some diversity if we're looking for it. A healthcare stock, LNTH, really crushed earnings estimates and got lots of upgrades with price targets well over $100. This one gapped up, consolidated its gains, staying over the 20 DMA, got a big price target increase yesterday. So that's another one showing relative strength. All stocks do not look like this, by the way. You're probably yawning, going through this saying, well, like, Ben, every stock looks like that because that's what the market looks like. No, the market doesn't look like that. If you pull up, in fact, let's just do it. If you pull up QQQ and SPY, they're not all above their key moving averages, okay? It's in between. It's below the 20 DMA on QQQ. All right, let's check out SPY. If you check out SPY, again, this got rejected. This got rejected at the 200, what is that? The 200-day moving average? Yep, got rejected at 200. So these charts are not pretty. And if you go through a lot of the other stocks we covered, they're not pretty. Only the ones I'm talking about this morning are pretty, looking good. So, and it's for fundamental reasons. Like LNTH, ASUR, we're going to get these guys on our show again. We've had them before. We're going to get them on our show again in a week or 10 days. We're just waiting to verify the date and time on that. So this one, Chris Tarbert, we brought them, but Chris Tarbert took the flag on this one, and he ran with it, and he was pounding the table, and he was right. Russell 2000 inclusion play, lots of upgrades, well above the 20 DMA, another strong stock. These are all quality companies to look at. MTW, I forgot who told me about this. It was on the watch list. We covered it on that gap. We played it for the day. I didn't play it after that because I maybe read this wrong. I didn't like the conference call. I didn't like the sentiment on the forward-looking guidance, even though numerically, quantitatively, they give good guidance. Qualitatively, there were a lot of ifs and uncertainty in the future of their guidance, even though the numbers looked extremely good. But the market just went with the quantitative guidance, I guess, or maybe they thought the management was sandbagging on their qualitative concerns, and it just kept on running, but it's staying above the 20 DMA. I forgot the exact numbers, but if you look at it, you'll see, giving their earnings guidance, that this does look like a cheap stock. So that's on my radar. Where their charts are not as strong, but resilient, I call them, okay? Tesla, Air, Exact Sciences, and MobileEye, and Scorpio. Those 5, okay? These charts, they've had good news recently, and the charts are, let's call it resilient, but not above key moving averages. So they're hanging in there, especially Tesla had some strength last week. And I think that maybe the explanation for why these stocks have been resilient but not breaking above is maybe valuation, right? We know Tesla's pretty expensive. We know Air is very expensive, and it's resilient for sure after the news that came out. I actually added some back yesterday after the $7 million order, but it's still below its 20 DMA, but hanging above the 50. Resilient after that drop. So much the same story with Tesla Air. Same with MobileEye, not really breaking out, consolidating after a nice run shortly after their IPO. Also very resilient. This was on the borderline of being a good chart, but I didn't have my moving averages here to validate that. If they were in here, maybe this looks like it might be over some moving averages. I'd have to chart some different ones. Not enough data to show you the 20, 50, and 200-day moving averages, at least on, let me see if I can get it. No, not quickly. All right. So another one, that one's on the border of having a great chart. Then we have Scorpio Tankers that Matt has given us. And this one, again, it's not over the key moving averages, but it's holding and consolidating its gains. It's resilient. So Matt, thanks for that idea. So all of these stocks are stocks I think you can consider doing more research in, adding to your long-term portfolio, maybe selling puts on the right days. All of those stocks I think qualify, especially the ones at the top, the ones that are resilient, a little more risky. Then we have LLAP. Now we're moving to stocks that are near support levels. I think these are solid companies near support levels to look at. It's LLAP, bounced right off the 50 DMA yesterday. And I think even without this $2.4 billion deal that's on the table, I think it's a solid company and you can buy supports. Then we have RELL. Let me point that out. You know, RELL, one of our favorite companies, bounced off the 200 DMA. I'm still holding this in my IRA. Bounced off the 200. So that's something that could be interesting. You have the 50-week moving average right over here. Keep that on your radar if you'd like to maybe add some. Clearfield, approaching support. I haven't pulled the trigger yet, but I'm monitoring this closely. This is getting close to the 200-week moving average of $44. And if you look at the RSI, yeah, it looks oversold or near oversold 32. Look at the history. It likes to bounce off 27. 1, 2, 3 times, 26, 27. And that I'm kind of aiming for that, because if you go from 32 to 27, I bet you this goes from 50 to 44 right on the 200-week moving average. And I think that's a great spot to pick up Clearfield. But it might not be immediate returns. Okay, you may look at this, $48. You may have to wait for the company to prove themselves a second half of the year. There's still going to be some doubters out there, but I think 44 in terms of risk reward, probably a great level there at the 200-week moving average. Tableau, another one we haven't covered a lot because I couldn't get interest from the community, but this is one of the templates I used for kind of predicting what LAZR would do and what LLAP would do. In the case of LAZR, we're correct. In the case of LLAP, hasn't played out this way. But this is one of those plays where you have massive news. It gets rejected at the 200 DMA, consolidates, and then breaks through the 200 DMA. And this is on the Yahoo partnership, bringing in $1 billion a year in revenue. And it just ran on that until earnings. Now, it pulled back. Why did it pull back? Not because there's anything wrong with that deal, but because they have to invest some money this year to support the new business from Yahoo. That's primarily a lot of that revenue is going to hit more so in 2024. It is starting to hit in 2023, but that $1 billion a year in revenue, a lot of that onboarding in 2024, and they have to invest in 2023. So on the earnings call, they basically their EPS guidance came down a little bit in 2023 because of that investment they have to make, and that's why I pulled back. And I think the story is solid. Approaching the 200 DMA here, this is a stock you want to look at, I believe, for a long-term hold. Of course, do your homework on the company and the Yahoo deal. Another one, which this is a little more opaque because we don't know exactly why it's going up, but it's now near that support we've been talking about. That 50 DMA, we're waiting for $10, but the 50 DMA moved up, and now it's at 1090. The stock's right at 1090. Something going on in silicon carbide, maybe. We really don't know the details yet. But it seems like there might be something going on there. And now the support level could be interesting on CVV. CYH, thank you, Chris Tuttle, for giving us this speculative name after earnings. Now, there's a little concerning because it gap and ran after earnings, but now went below. But because of yesterday's price action, I put it on the chart. If we didn't have yesterday's action, I would have nixed it. But yesterday, so maybe it was a false breakdown below the 50 DMA. This is a stock which, Chris, it's speculative, so that's why I didn't put it at the top of the list. Speculative, but they have a lot of debt. They can get rid of some of this debt, pay off some of this debt. Their earnings power will really explode. Thank you, Chris, for that story. This is a healthcare company, so near a support level here at the 50 DMA after earnings. This might be something you might be interested in picking up. And of course, DRIO near a support level. Let's look like how many times? 1, 2, 3, right around like right under that 4 level. Something you might want to consider here as well. And there's a triple support on this one, 1, 2, 3 times here at about 84 cents. We'll be interviewing the CEO, Jim Mish, today at 4:30 p.m. And that's all we got. Let me see if there's any other news that just came in since the show started. Today, it's all going to be about Credit Suisse and a PPI. That was nice to see that PPI number. But again, I think it may be premature to say, let me pile into stocks. I think the play is going to be TLT. That's where the money's going. TLT and gold. By the way, I had a 180 plus target, remember, on this one? And now we're almost there, 179. So let's take a closer look. The high candle here was 181.73. High candle here was 181.22. RSI is at 66. Yeah, you know what? I'm going to stick with this as some sort of insurance. If Credit Suisse goes under the next couple days, I think you could see gold making a run for 185. Okay. That's the story on TLT. I mean, gold, and then TLT butting up right up against the 50 DMA. And I got to like this. I got to like it. Look, the whole system is breaking because of this collapse in bonds. This collapse in bonds happened because of the rapid rate in interest rates. I think the logic is so simple on this, and it's so easy to park yourself in TLT, maybe in size in a long-term account. I really like this. I'm talking myself into buying more TLT right now, actually. I'm going to have to look at my IRA, give myself some margin of safety here in 2023. And I think that's a great place to be. All right, with that, I hope this show was informative, a little different than some of the other shows, again, because the volatility of the market, just kind of giving you ideas and following up on stocks, which could be solid for the long term. And with that, we'll see you at 4:30 p.m. today for XXII CEO interview. And I'll do a quick post-market wrap. Maybe I won't actually, because I'll be preparing for that Zoom at 4:30. We'll see. All right. So we might skip the post-market wrap at 4 p.m. and do it like right after the show. We'll see. Anyway, have a great day, guys. Keep the collaboration going. Good luck.